All right, good afternoon, everybody. Want to take this opportunity to welcome one and all to our Exploring the ETF Analyzer event. Today's Wednesday, January 12th. We're in 2022. Time's already flying by. We're almost into mid-January. We're coming off of a great event this past weekend, our Market Vision 2022. We had great participation. A lot of people new to EarningsBeats, getting a feel for what we're all about. If you're new to EarningsBeats, I want to thank you for taking the time to stop by. I want to thank our wonderful veterans, of course, who've been with us, some for many years. Appreciate it. Like all of our events, this one will be recorded. Some point, probably tonight, you'll get a copy of the recording. You'll be able to listen to it at your leisure. For some reason, you can't stick around for the entire night. Let's not worry about it. You'll be all set. All right, so I want to see if Mr. Bowley's in the house. Let's start with that.
I'm in the house, but I'm a little distressed.
Okay.
I looked at our advanced forecast here, and I'm in South Carolina.
Okay.
I'm seeing 100% chance of snow on Sunday.
Oh.
I didn't ask for this when I moved to South Carolina. I was trying to get away from that.
Yeah, I know what you mean. I don't think I've got a snow shovel.
Yeah, I'll be staying home Sunday. I've got no way of getting around.
Listen, I grew up, I was born and raised in Detroit. I had my fill of snow. We moved to DC, figuring it would be a little bit better, and we got whacked there too. So now, like you in South Carolina, I'm not expecting it. So I don't think I've got a shovel.
Yeah, well, you're on the coast. You probably aren't going to need one. I think you'll be fine.
Okay. Listen, I figure we might as well just get cranking right away, and I'll let you take it away.
All right, sounds good. First of all, welcome everybody. This is an event that we don't do very often, but I really like because I love the ETF Analyzer spreadsheet that we've put together. And I'm hoping to continue to build on it as we go further. But the purpose of this session tonight is really just to introduce any new members who may not be aware that we even have this product, because most of what we do in our service relates to individual stocks. But we do have a lot of members who like to trade ETFs or invest in ETFs, put together a portfolio. And it was with that in mind that we created the ETF Analyzer. So tonight, what I want to do is just go through and explain the whole process to you. What we do, how we develop our chart list, and then how we put together this analyzer. And most importantly, how I think it can help you in terms of meeting your goals using ETFs. So why don't we start off with the agenda for tonight. Got a few things I want to go through. First of all, obviously introduction, so welcome everyone. We're going to go in and take a look at the scanning and selection process. So we have a list of ETFs that we have on our spreadsheet, our ETF Analyzer spreadsheet. And so I'll show you how I go about selecting those ETFs and how we, get the chart list to you, how we put the chart list together, and then also how we put the spreadsheet together. Then we're going to get into a little bit about personal objectives, because once everything's laid out on the ETF Analyzer, it really becomes more of a personal choice as far as what types of ETFs you want, whether you're aggressive, whether you're more defensive, whether you're looking more for maybe income or value oriented stocks versus growth stocks. All of that really varies. So for me to sit here and say, hey, this is the way you should put it together, really wouldn't be a great way to spend our time. First of all, we're not registered investment advisors. So nothing I say is, it should be construed as a recommendation to buy or sell any security or ETF. But, I think that we've worked enough with stocks and ETFs to at least provide some pretty good education. And, when I talk about the ETFs or putting together an ETF portfolio, to me, the most important thing is just knowing what you own. I can't tell you how many times I've spoken to people who trade ETFs, and I'm like, you know what's in that ETF? Do you realize that Apple is 22% of that ETF? And they're like, what? And so that's the key. It's really understanding what you own and then just being comfortable with it. As long as you're comfortable with it, that's fine. But I do think it's an eye opener for a lot of folks trying to figure out how to put these portfolios together. Another thing that's really interesting to me, at one point, we use this ETF Analyzer to help us put together our model ETF portfolio. And I think it was maybe a couple of quarters ago, I had an email from a member, and the member said, well, you only selected 6 ETFs for your model portfolio. You're not diversified enough for me. And I went back and I just looked, and the 6 ETFs ended up covering something like 1,200 companies. And so I think one thing that's really important to understand is that diversification many times relates back to how diversified is each individual ETF. Some are highly concentrated in just a few stocks, but others, if you get an equal weighted ETF, you might have 500. If it's an S&P 500 ETF, you could have 500 equal weighted stocks in a portfolio, or in one of your ETFs in your portfolio could be that diversified. So if you get 3 or 4 of those, I would almost argue you're too diversified. So it's not the number of ETFs you own, it's what those ETFs invest in that you need to be more aware of. So, I could argue that you got a fully diversified portfolio by owning the Spider. One ETF, 500 multinational companies, some of the largest companies in the world, spread out across all 11 sectors. I don't know how much more diversified, you're looking to be. But to me, that's very diversified to have 500 of the largest companies. So diversification really comes down to each individual. What's diversified, somebody might not be nearly enough for someone else, or vice versa. Anyhow, and then finally, what we'll do is just talk a little bit about composition of an ETF portfolio. So let's go ahead and get this started. I'm going to start off showing you the scanning and selection process and going from there. So let's pull this up. And you should have my screen up showing the stock charts dashboard. And so the first thing I do when I go to update our strong earnings or our strong ETF chart list and begin to put together our ETF Analyzer is I grab I have a scan that I use, which is a broad ETF scan, and then I'll edit it. So we'll take a look at it. And essentially what we're looking for here, keep in mind that an ETF is considered a stock. So when you say a type equals a stock, this will get us both ETFs and stocks. And then here we're looking for a certain amount of volume. We're talking about an ETF. I'm not sure that volume really matters as much with an ETF. I have 200,000 in here. You could change it to 100,000, maybe even 50,000. As long as the bid and the ask, that spread isn't too great, I would be okay going down further on this volume. But whatever you pick there, that's going to help to direct how many ETFs are returned in the scan. So that's something where if you do 200,000 and you run this scan and you only get 50 ETFs, maybe you want to lower it to 100 and see how many you get. Maybe that'll take you up to 70 or 75. So it's just about filtering to get down to a list that's comfortable. So that's the volume part of the scan. Here is basically where it's getting rid of all of the leveraged ETFs and so forth. So that's the wording you want to try to limit some of, try and weed out some of the things you don't want. Also, country is the US, so you want these US ETFs, and then a scooter. So the one thing, everything we do at EarningsBeats really revolves around relative strength and momentum. And so when you've got scooter scores, when you compare an ETF in terms of scooters, that's Stock Chart's technical rank, if you're not familiar with it, you're looking at ETFs versus all other ETFs in the ETF world. And if you have a scooter stock charts technical rank above 80, what it's telling you is that based on the formula for the scooter, which you can learn about in chart school, just go in here and type in scooter or stock charts technical rank, and you can learn more about it. But it's just a formula. And what it's going to do is it's going to go through, calculate using the formula for every ETF, and it's going to come up with essentially a value from 0 to 100, with 100 being the best performing ETFs, 0 being the worst. And so what we're doing by using 80 is it's putting us in the top 1/5 of all scooters based on, or 1/5 of all ETFs based on the scooter score. So when I run this, it should give me many of the best ETFs based on, again, the formula for the stock charts technical rank. So let's run this. And so you see 107 ETFs come up on this list. Now, the first thing I'm going to do is I'm going to take, assuming that I'm happy with the number 107, I'm going to take this and I'm going to put it into a chart list that I've already set up. In this case, I have strong ETF test, and I'm just going to drop these right in. So there's the 107 ETFs that now will make up our strong ETF list, except I'm going to put it into edit form, because one thing I'm going to want to do is go through, and if it's an ETF, it can be a US ETF, but it could concentrate on things outside of the US. So for instance, as I go down through this list, there's a Japan hedged. I would immediately hit that. I'm going to delete anything that's outside the US. You know, you can only be, I don't know if I want to say experts, but, you know, we do what we do in the US, trying to understand everything that's going on, you know, geopolitically and so forth around the globe. That's not something that is our expertise. So if you want to do international ETFs, you'll need to go and, you know, check something else out or do your own research. This is really, you know, figure out what you want in terms of US ETFs, and our universe, our strong ETF chart list and our ETF analyzer will help you with that. So I'm just going through, you know, and I'm not going to sit here and do this, all of these, but I'm just getting rid of anything that has to do. I'm just looking at the titles, and if it's something other than the US, I'm immediately tossing it. So anyway, so then I go down after I've checked all those off and I hit my delete. So I've gotten rid of those. Then there are some others that, and what I'm using now is I use the Fidelity ETF tool to come up with the various information that's going to go on the ETF Analyzer spreadsheet. So for instance, and I'm going to show you this over at Fidelity, but here's AMJ. That's the very first ETF. What you do is you go into this news and research and just keep scrolling down, or, you know, finding where you can enter the name, get information. But let me go ahead and let me grab, what was that, AMJ. Okay, so AMJ, I'm going to enter here. And I pull up the ETF. And first thing is, Fidelity doesn't make any additional research information available for this security. It's like, well, guess what? That one's getting deleted because you want to know what you own. Well, I can't find any information on it. So I'm going to go in and I'm going to delete those. Those are not going to make the list. You know, if you run this scan and you want to do some more research trying to find out, but what we're trying to do is to quickly put together a list that presents a number of ETFs that you might be interested in. And also gives us the information we want to make educated decisions. That AMJ was not going to do that, so deleted it. So anyway, I go through all of that, and then I'm going to look at this AMLP. Let's pull this one up. Now, once you get one that does have information, you can look at the holdings. Here are the top 10 holdings. You can see not very diversified. 10%, 10%, 10%, 9, 9, 9, 6, 6, 5, 8, or excuse me, 5.8 and 4.4. You add all those up, the top 10 come up to 83%. It's pretty heavily concentrated ETF. There are only 17 stocks in this entire ETF, 16 long, 1 short. So you can get some pretty good information from Fidelity. And what we do is we take a lot of this information and put it onto our ETF Analyzer spreadsheet. So we try to do a lot of this homework for you. And you'll see when I go over the spreadsheet later, you'll understand, where I put all the top 10 holdings information. Also, sector exposure. Many ETFs will show 11 sectors because they're invested in all 11 sectors, more diversified. This one, as you can see from the holdings, these are all energy names. So 100% of this ETF is energy, which again, I'll show you when we get to the spreadsheet, what that looks like. And by the way, the reason I'm using Fidelity now, in the past, I've used Yahoo. As I was looking recently at some of the holdings and so forth in some of these ETFs at Yahoo, they were the same holdings that we had 3 months ago. And so I'm starting to wonder about how often the information is updated over at Yahoo. So I went with Fidelity, which I think gives us better information, more updated information. And that's why I've made this switch to go with Fidelity. Now, to get to this page, you may have to be a member or, have an account with Fidelity. So if you don't have an account with Fidelity, you can do research, but it's going to be a little bit more limited. So if you're looking to try to find this page and you can't, it might be because you don't have an account with Fidelity, in which case just have to, maybe do a little research online and find some other websites that may provide the same type of information. But if you are a Fidelity account holder, you can go in and you can look at a lot more information. I mean, there's performance and risk of this ETF. So it'll show you longer term, different percentages and so forth. Here's the month-end average annual total returns, and you can go back 1 year, 3 year, 5 year, 10 year. And you can see 1 year, energy's done really well. But if you go back 3, 5, and 10 year, energy has not been a very good performer. It's really been more about this past year and also getting off to a really good start in 2022. Anyway, that's the information that I'm getting from over at Fidelity to put this all together. All right, so I have my scan information. I've run that. I've put this into a chart list. Now I'm going through and weeding out the ones that either are, I don't get enough information on. I mean, this commodities select strategies, the COMT. Let's look at one more over here. So let's look at COMT. I mean, you got treasury bills, you got some, you got the Bank of Nova Scotia. I mean, this isn't stock related. So anything that's, commercial paper or treasury notes, whatever, anything along those lines, I'm not going to be looking at. So, kind of keep that in mind. The other thing you can do is you can view all holdings. So this is the top 10, but if you wanted to see everything that's in a particular ETF, you've got a link here to do that. So you can pull this up and you can see, I mean, look at what's in here. I mean, this, again, maybe this is something that's meaningful to you and you want to kind of diversify into things other than US equities. That's not what we're doing. We are looking at US equity ETFs. All right, so let's get rid of that. All right. So once I have all of that information, then what I can do is I can go in and pull up one of these charts. So let's say 95 charts is how many I end up with. What I can do, and you can see the way this chart is set up with PPO, price action, volume, and an AD line. Well, when I'm looking at ETFs, we put these together based on scooters, and I like to look at relative strength. So I actually have a style button that I've set up over here, strong ETF style button. And so I can pull this up in this style, and there's the PPO, here's the scooter. So you can see how this scooter has really gone crazy to the upside. And if you're wondering why, by the way, we haven't updated our strong ETF chart list. all this rotation that's been taking place. Look at the scooter. You know, back in July, this would have been included because the scooter was high. If we had done it in early August, it would not have been included because the scooter is back to 50. Second week of August, it would have been back in. Third week of August, it would have been back out. By the time we got into September, it would have been in for a month. And then in November, it would have been back out. And it would have been out for a while. Now it's back in. It's the volatility and the rotation have made it such that trying to put these together and have them meaningful, by the time we present them to you, they go right back out of favor again. I mean, it's been a crazy year in terms of relative strength and the rotation. Let me show you if we went out, say, 10 years on this particular ETF. Look at the scooter. I mean, it would have been out of favor for, I mean, we would have been below 80 for like a year and a half at a time. And then here, a year and a half at a time. But just recently, it's been crazy, this whipsaw that we've been seeing. So we haven't updated it in a while. We'll look, you know, normally what I would expect to do is to update it maybe twice a quarter, maybe every 6 weeks. And so going forward, likely what we'll do is update the strong ETF chart list again every 6 weeks, and then have the ETF Analyzer spreadsheet also updated at that time. All right, so now what I can do is once I have the setup that I want, which is right here, I can go down and I can now say, okay, apply this style to everything, to every ETF on this chart list. And so now when I go to the next one, I'm going to have the chart list set up the way I wanted. The PPO, the scooter, so I can look at the history of the scooter, the chart, price chart, volume, and then the relative strength versus the S&P 500. So I can decide, you know, if this is the type of ETF that I would be interested in, just looking at the price action. All right. So that is essentially the ETF selection process. And then once I have all of that together, then it comes down to, you know, and we present that to our members. It comes down to what each member is looking for. So let's talk a little bit about personal objectives. You know, one thing you're going to look at, everybody I think is going to try to decide is, how diversified do you want to be? You know, and that doesn't mean how many ETFs do you want, because I'll show you many ETFs are very diversified. So you could put together 2 or 3 ETFs. You could put, as I mentioned, you could put together the spider as your only ETF, and you're pretty diversified with just a spider. You got all 11 sectors covered. You know, no stock in your portfolio is going to be more than about 5.5%. And so I think that's pretty good diversification. But you might want more. Some might not want the S&P 500. I get it. Everybody's different. Some might want much more concentration. You might look at it and say, well, you know, the technology is 29% of the S&P 500. I want a portfolio of ETFs put together where technology is 40%. Or I want a portfolio put together where technology is only 15%. Maybe you're looking more at income. And so you want to be more into financials and industrials, and maybe consumer staples, real estate, energy. They pay dividends. So maybe that's going to be more of your, everybody's different. And so I think putting this ETF analyzer out there for everyone is really something that makes a lot of sense to me. And, you know, basically, what's your goal? Are you trying to beat the S&P 500, or are you just trying to spread it out, maybe get a portfolio put together that's not going to have as much beta? So you're not going to have as much huge swings in it because you're not trading as many technology stocks, and you have more consumer staples, more defensive areas, maybe higher percentage concentration of utilities and real estate. Again, it comes down to each individual. So with that, I'm going to bring up the ETF Analyzer, and we're going to talk a little bit about this. And by the way, I hope that we're out of here by, you know, in 20 minutes. So this is not going to be a very long webinar. Once you see how this is put together, I think, it'll start to make a lot of sense, and then you can play around with it. Now, what I have done so far is this is an incomplete worksheet. I was actually working on it all day, and we have our next model ETF portfolio next week on the 19th to select the ETFs that we're going to ride for the next period, next quarter. And so we'll talk about that next week. So I'm going through that process, and I could have used the one from a few months ago, but I really wanted to give you a little bit more updated information. So here is the ETF Analyzer. And what I do is once I've gone through and developed my chart list, then you're going to see all of the ETFs here from that weeded down list. So we started, when I did that scan, there was like 107 ETFs on that chart list or on that scan. Those were the results. When I finish, and I'm not finished yet, you can see, and I haven't put in the names for some of these. Like I said, it's an incomplete worksheet, but I've gotten down to the SPYV, and we're up to 52. I think we're probably going to come in around 65, 70 ETFs out of that original 107 from that scan that I showed you earlier. So 60 or 65, maybe even 70 are going to make the cut. What I do is for each one of these ETFs from Fidelity, I'm getting the top 10 percentage. And then also from Fidelity, it's giving me that breakdown in among the different sectors. So here's all of the sectors. So the first one that we looked at was that AMLP. Remember, I pulled that one up. And the top 10 were very heavily concentrated. Now, I think it may have shown 83%, but I'm showing 80%. That's probably because we looked at it different times. I have a feeling Fidelity updates it, makes it more up to date. I think it's like constantly updating. Anyhow, it's all energy. So among the sectors, it's 100% energy. So there's your 100. I have this audit out here to make sure. Now, when I go through and I add I put in all of the sector percentages for each of these ETFs, a lot of times I'll come over here and the total will be something like 99.8. I have a feeling that means that there is like 0.2% in cash. But what I do is whatever that little bit is that's left over, I put into whatever the highest. So like if this had come in at 99.90, I would take 0.1%. I would just add it to financials. So if financials were 28.23, in order to make this 100, I'd make it 28.33. So it's going to be a little bit off from the actual number, but I wanted all these numbers to equal 100%. Now, the other thing that I do here on this spreadsheet is if you keep coming over here, I break down and I show how much of the ETF is comprised of aggressive sectors, defensive sectors, and neutral sectors. Aggressive sectors, I define as these first 5: technology, discretionary, communication services, industrials, financials. The defensive are the next 4: healthcare, staples, real estate, utilities. And then neutral, I consider energy materials, because energy materials kind of flow. They kind of, move to the beat of their own drummer. The dollar can play a big role. Geopolitical issues can play a big role. It's not really telling us whether or not Wall Street is being aggressive or defensive. Energy and materials can do well in any market, or they can do poorly in any market. So that's why I just can consider them neutral. I don't look to them for help in trying to figure out what the market's doing and how Wall Street's feeling. So that's not going to help me take the temperature of the market. But this is information that might be very useful to you when you come over and you're looking at one of these ETFs. Is it an ETF that's very aggressive, or is it an ETF that maybe is concentrated more in defensive? This one's got 29% aggressive, 52% defensive, and 18% neutral. That might be very appealing for some of you who don't want to get involved in a lot of the aggressive areas of the market. Some, though, might look at, hey, this one's 87% aggressive. It's not in the defensive group, and it's 12% in neutral. This one's high octane. or at least on the surface, I would consider it high octane. So which one is this? This is the Global X Autonomous and Electric Vehicles ETF. Yeah, that's very aggressive. And the stocks in this ETF that comprise the ETF, 31, almost 32% are in technology, 38% consumer discretionary, 5% communication services, 13% industrials, and it's 12% materials. So you might be very aggressive and say, I want 20% of that in my portfolio. Someone else might say, well, I want to expose myself a little bit to it. Maybe I'll put 5% in that ETF. And others might say, I don't want any part of that. That's too crazy, too volatile. So again, everybody's different, but that's where you will find the breakdown to quickly help you identify aggressive versus defensive. And that goes all the way down. All right. What else on the spreadsheet? Well, one thing you'll notice is at the top, the S&P 500. So this is what clued me into the fact that Yahoo wasn't changing anything. I had the same percentages for technology. All of these sectors were the same as they were last quarter. And I'm like, that's impossible. The S&P 500 has been changing names in and out over the last quarter. You've got companies that are rising and falling. And so the percentages have to be changing. Energy, for instance, can't be the same. Energy's gone up quite a bit since the last quarter in the last year. So energy percentage should be going up, but it didn't from the last quarter. So that's why I used I went back and I looked at the spider over at Fidelity, and the percentages that they gave when I looked at it earlier today are the percentages that are in here right now. The reason that that's in here is that once you put together your own portfolio of ETFs, we're going to post the results. You can put 8 ETFs in here and show what percentage you want to allocate to each of those ETFs. And it's going to have to total 100%. Let me just do this real quick. If I do 50% here and 50% here, this audit will tell you no error because your portfolio equals 100%. If I put 40% in here, error, I've only totaled 90%. So that's how you know that you've got the correct percentage allocation in here, okay? Now, once you pick your funds, and we'll actually do the calculation over here. So technology, if 50% is going into technology, 8.89%, 50% of that is 4.45. There's your 4.45. So the percentages that come through here are based on us doing the calculation for you, that if you put a certain percentage in each ETF, we go over here and calculate it, and then we total. Well, I guess the total is just automatic. Aaron does this, but the total percentage is going to be 50% of this and 50% of this. And as we change numbers, it'll get, those numbers will change up above. So the purpose here is you can then compare, once you've put together your portfolios, compare to the benchmark S&P 500 and see if this is what you want. Do you want technology to be half of the S&P 500? Do you want industrials to be 10 percentage points higher than the S&P? Financials, 14% higher. If this is the way you want to have your portfolio set up, then this is a little bit of further confirmation that you've, done your homework, and now you know what you own. Again, you know what you own. If you just go out and randomly pick 5 ETFs, I challenge you to take a look to see what the makeup is of those 5 ETFs. Some folks have no idea that all 5 ETFs they bought all own Apple. And Apple might be a top 10 holding in every one of them. Well, you got a lot of Apple in your portfolio. You might think you're really diversified, but if you put 5 ETFs in there where Apple's is highly concentrated within the ETF, you're not really diversifying as much as you think you are. So you can go through and, let's change this to 10%. Let's just do all the next We'll just do 10% in every one of these. And now I'm up to 100%. Well, I just randomly did those 10, and now you can see, the makeup here. Financials 19 versus 10. So as you may, and 26% in energy, you might say, hey, I love energy right now. And this might be an allocation that, you like because you want a quarter of your portfolio in energy. Completely up to you. Now, once you get this, though, you've got to realize, okay, how diversified are these ETFs? Well, the top 10 holdings right here will help you a little bit. This ETF, the top 10 holdings, is only 7%. That's widely diversified. If the top 10 holdings only make up 7%, there are going to be a ton of stocks in this ETF. But what if we go down below to this ETF? This is the energy ETF. 66.5% is in the top 10 holdings. And 100% is energy. So 10% of 66.5 is going to give you 6.65. And there, well, I'm not sure why that's coming out at 10. Oh, 10% of 100%. Never mind. 10% of 100% gives you the 10% allocation to energy. So that's what's moving this number up to 26.35, is that you got a couple of these 10 percenters in ETFs that are 100% in energy stocks. Okay. So that's going to, there's 20%. That's why your energy number is so high. Again, know what you own. Now, let's say I'm looking at this and I see, okay, 66.5%, 100% in energy and 66.5% are in the top 10 stocks. What are those top 10 stocks? Well, this ETF, this information is coming from the second tab. So you can go to top 10 holdings and go to the 10th ETF over. And there's the FENY. Here's the 66.5. And here are the 10 stocks that make up that top 10 holdings. You better like ExxonMobil and Chevron a lot, because almost 38% of this ETF are those two stocks. And, the other energy that we looked at, 40%, you can see is much more diversified. And it also looks like maybe it's, lesser known names. Some of them, there's ConocoPhillips, there's Occidental Petroleum. So there's still some pretty big names in here, but it's not the same as, XOM and CVX. Now, both of these ETFs are 100% FCG and FENY right here. They are both 100% energy, but they're not the same. Owning one is not the same as owning the other. Look at the holdings. They're completely different. Whoops, right here and right here. Most of these holdings, even if they're the same in terms of some of the symbols, the percentages are completely different. XOM and CVX, you don't see them in the top 10. That's 38% of this ETF. Some of the top holdings over here, you don't even see in the top 10 on this list or on this ETF. So my point is, even though both are 100% concentrated in energy, they're completely different in how they're going to perform, or potentially different in how they're going to perform. So which one do you want? Well, you might want to take a look at the XOM and CVX charts and see if you like the charts. We already know they're big companies, multi-billion-dollar companies. Maybe you do want, this group because you love these three stocks and they make up almost 50%, probably about 45, 46% of the entire ETF. Or maybe you want to have that diversification. But once when you're looking over each one of these ETFs, this lines up 1, 2, 3, 4. You look at the ETF, that's going to line up with over here, 1, 2, 3, 4, and there are your ETFs. There's the names. Once I have everything done, we'll have all the names in here, all the percentages, and then literally you can do exactly what I did. Just figure out how you want to put your ETF together, which ones make the most sense for you. You you might look down this list, and I don't have all the names in, but here's the S&P 500 value ETF. Look at how different this is in terms of percentages. 12.5% technology, 775 discretionary. That's roughly 20%. If I go down here to the spider, which is the S&P 500, look at the difference. Now I've got 42% in those two sectors. So here it's only 20%, and these are going to be concentrated in value names. So again, what names are in here? Well, 16% are in the top 10. So it's going to be a pretty widely diversified. I would say, once you start getting up into the 35, 40, 45 area, you're starting to get more concentrated. If you get up to 60, 70, 80, you're heavily concentrated in those top 10 holdings. Again, some of you might want to be heavily concentrated. You might be a little more aggressive. Others might prefer this 16%, knowing that your money is spread across all these different sectors. So what's in this ETF number 22? Well, we go back over here, scroll over. And here you got Berkshire Hathaway, Johnson & Johnson, Procter & Gamble, Walt Disney, United Health Group. I mean, here are some, and there's your energy, XOM. So here's some pretty big names, and they're going to be more value oriented, not as much growth, and widely diversified. You might look at this and say, well, in this market environment, because as you know, if you've been, if you're a member of EarningsBeats, I'm very cautious about the market right now, especially growth stocks over these next few months. We got to get through the top of this inflation cycle, which I think is going to come probably in March, April, maybe a little later, but I'm banking on March or April. I think that's where we're going to top in the core CPI. And when we do, I think it's going to be much more, we're going to be wanting to look much more into growth. Until then, it might make sense to be a little bit more cautious with your money. You may want to stay invested just in case the market goes up, but you might want to do it with areas that won't get hit as hard, potentially, if the market does have a big sell-off. So I could see, in most markets, you might put 5% in here, but maybe if you're a little nervous, maybe this is an ETF that you're looking 15, 20% into. Again, it comes down to each individual and, your approach and your goals for the market or goals for your own investing. Also, I mentioned how many ETFs do you want to own? Well, if you're looking at this list of ETFs and you're putting together some of these ETFs that have very, very low top 10 holdings, I mean, this is an incredibly, diversified portfolio. Here, the mid-cap 400, 8.5% in the top 10. That's very diversified. But others of you might want to be looking at this is going to be another energy, the OIH, but that's 73%. Let me see if I can find another one that's more. Here, I mean, this is 59% in the top 10 on the SMH. That's 100% technology. So if I were to put, 50% here, and then, because I really love semiconductors, and then I'm going to put 50% in the spider. When we go up here to the top, no error, because I just totaled 100%. Look at the 64% now that's in technology. I've got almost nothing in all these defensive groups over here. Well, if you underperform while you're holding those two ETFs, it's going to be pretty easy to figure out why. It's probably because the semiconductors didn't do very well. Again, knowing what you own helps you when you go back to analyze your performance afterwards. So you're making a big bet on semiconductors. Well, if semiconductors don't do well, obviously technology is not going to do well, and you're probably going to underperform. All right, I'm trying to think if there's anything else. That is essentially what I wanted to go over. One other thing on the top 10 holdings is once you have selected your ETFs, let's say, for instance, that I want this one right here. So what I'm going to do, I don't think I'm going to be able to do this in numbers. I can do it in Excel. But essentially what I'm going to do is want to copy all these cells, and bring it down and put it in here. And then I'm going to change this. So if I decide I'm going to put 20% in this ETF, then I'm going to say 20%. And what this will do is it'll multiply the 20% times each one of these stock holdings, and it'll give you the 20% answer right here. And so if you put 5 ETFs together, what you'll be able to do is just look and see if you see any common stocks. You know, is Apple in all 5 of these? If so, it's going to show you how concentrated you are in Apple stock. So that's all this is down here at the bottom. It's just another tool. And once you get the ETF Analyzer and you download it into your, if you download this Excel spreadsheet, you can then manipulate it and use it however you wish. I think it's a pretty cool feature. And I think this really is a great way, if you're looking at ETFs, to be able to go back and justify the percentages that you're putting into each ETF, and be able to look at the result at the end up here at the top and see, if you really want, you might say, well, I don't want to be in technology as much as the S&P. Maybe I only want 20%. And you pick all your ETFs and you come back up here and you look and your technology is 35%. Well, clearly that's not meeting the goal that you wanted of reducing your exposure to technology. So that's really important. One last thing I'll mention is you might want ETFs that we haven't listed. You might be a value investor, and maybe some of the value names, or maybe when I say value, beaten down. You might like beaten down ETFs. Many of the growth ETFs are beaten down right now. So you might say, hey, I'd like to put a growth ETF in here. Well, when you get this, anything that's shaded in blue is an area where you can put your own input in. Everything else is going to be locked. So if you wanted to go in here and change something that we're putting in here, you're not going to be able to do it. But putting in the percentages, that's up to each individual. That you can use those cells. And likewise, you might look and say, hey, I want this ETF. And you can go ahead and add the top 10 holdings if you want, do your own research there. But you could put in here your own ETF and say, ABC, ABC ETF, and I want to put 10% in. And when you go up here, the 10% is already added in. So we've already set up the formula for you to include additional ETFs that you really want to put in. You would, though, have to go in and manually spread out from Fidelity or from wherever the weighting by sector. But once you have that, it'll be calculated in these numbers. Okay. All right, John, that's pretty much what I wanted to go over. I will say that I'm in the process of updating this. So probably, I don't know if I'll have it done tomorrow because I have a lot of other things on my schedule tomorrow, but I'll try to finish it Friday and maybe sometime over the weekend, definitely before next Wednesday when we do the model ETF portfolio draft. We will have this spreadsheet out ready for everybody. So I don't know if I missed anything or if you have any comments or if we have any questions.
Couple questions. One says, does the RSP outperform the SPY?
Well, the RSP is on here. You'd have to go back and look. I would say probably not, because at least not recently, because the spider is really being driven by a lot of stocks that are heavily weighted in that portfolio or in that ETF. So the Apples, the Microsofts, the Googles, the Teslas, those are the ones that are driving the SPY. In the RSP, Apple is treated just like some, $2 billion company, even though, Apple's close to $3 trillion. Its impact on the RSP is going to be the exact same as a company maybe that's only got 1 billion. And those companies haven't done as well. So the RSP, in my opinion, is not going to perform as well as the spider, as long as these large cap names that are so heavily weighted in the spider are performing well. Now, going forward, I think the RSP might outperform the spider, at least in the first quarter, because I'm a little concerned about these growth names with inflation going up and the threat of higher interest rates and, the Fed being so hawkish. My gut feeling is the RSP will outperform over the next 3 months, but we'll see whether or not that's the case.
All right. Here's like an observation.
Mm-hmm.
You may want to let listeners know that the SPY is generally used as a trading vehicle. It's a bit expensive to buy and hold. I'm pretty sure I learned that from you.
Well, again, it comes down to each individual. I don't want to say whether the SPDR is a great investment, not a great investment. I mean, everybody's different. I think the SPDR is a well-diversified. I mean, even though Apple and Microsoft are heavily weighted inside it, and that's number 50. I mean, if we go over here to the top 10 holdings, I mean, you just have to make sure you're comfortable with it. And, it's still pretty heavily, trying to get over to 50, and I'm trying not to make everybody dizzy. Sorry about that. But you got Apple, almost 7%, Microsoft, 6.25%, Amazon, 3.6%. Now, sometimes you'll see these stocks in here twice. Google, I believe that's probably the different class, class A versus class B, that type of thing. But if it's not, if Fidelity doesn't tell me, I just post it separately, and that's the assumption I make. So really, Google is 4.15% here of the SPDR. But my point is, as long as you're comfortable with the SPDR being, and having your investment more concentrated in Apple and Microsoft, I mean, if you put your entire portfolio into SPDR, you just have to realize that 13% of it is in Apple and Microsoft. As long as you're comfortable with that, that's fine. Others might not be that comfortable, and you might want to get something else. Now the RSP right here, is that the one we were looking at? I think it was the RSP. Wasn't that the question, John?
I'm sorry, Tom, what'd you say?
The RSP, is that the question? I think it was the RSP that.
Yeah.
Yeah. If you look at what's in this, Cerner Corp is the high holding at 0.24. Now, if there are 500 companies in here, the average weighting is going to be 0.2%. 500 times 0.2 equals 100%. So some of these are going to be a little bit above 0.20%. Some of them are going to be a little below, because since the last rebalancing, some of these companies have outperformed and some have underperformed. So you're going to see a little bit of that, a little bit of a variance from 0.20%. But my point here is, every stock is basically, Apple's in this list. So Apple is probably somewhere around 0.21 or 0.20% in this one. Whereas, if we look over here at the SPDR, Apple's 6.84%. So it just depends. Do you like the large cap growth names? If you do, I think the SPDR is where you want to be. If you're concerned about some of these bigger names, then I think the RSP is a better vehicle. So it comes down to choice and personal preference. Anything
Okay,
else?
let's end with this one. Hold on, I got an open question. I've lost it now. Can you look at the SPYG and the SPYV?
Well, I don't see SPYG on here. I think that's the growth part of the S&P, which is why it's not on here, because it probably doesn't have a scooter of 80 or higher. Actually, I can tell you. I'll be right back onto this screen. I'm just going up, rather than bring the charts up, I'm just pulling it up myself. SPYG right now has a scooter score of 71.5. That's the S&P 500 growth ETF. So that's why it's not on this list. It has the scooter is below 80, but you could always add it. Like I said, you can go back and put it on here and, include it if you want going forward. But the SPYV, you can see, is pretty diversified, 16.43. It's going to have, much less concentration in the technology and consumer discretionary area, because this is the value portion of the SPYV. So if you go over here to the top 10 holdings and we scroll all the way out here to the end, there's your SPYV, and there's your, Berkshire, J&J, PG, Disney, so forth. So it's just a completely different group of stocks that you own. Are you more of a value-oriented investor? Are you worried about these growth stocks with higher inflation? Then the SPYV is something that I would be considering. Maybe you have both and you just weight one or the other differently based on what's working in the market. based on momentum right now, certainly value, at least at the small cap and mid cap levels. Value is working much better than growth. Large cap growth is still holding its own, mostly because of those 4, 5, 6 big names that I talked about earlier. So again, just comes down to individual personal preference.
Okay, I think that's it, Tom. We can let everybody know they'll get a copy of the presentation, and the actual unveiling of the ETF, the ETFs for the model portfolio will take place next week.
Yeah, and anybody, if you are new to EarningsBeats and you want to be present for that, all it takes is a 30-day trial membership. So if you're not a member, because we're reaching out to our entire community, just making sure everyone's aware of this tool that we have if you are an ETF investor. But if you'd like to come for that event next Wednesday for the unveiling of our ETFs that we're going to put into our portfolio, our model ETF portfolio for next quarter, then make sure you sign up for a 30-day trial. You will have to give a credit card. We can't get you input into our system without the credit card. However, we always send out reminders before you expire. I think, I know from my standpoint, I don't like to subscribe to things when I know, if I forget that I'm going to automatically be charged. We're going to make sure you're aware of it. So if you don't want the service going forward, you have ample opportunity to cancel your membership. But I think you'll like it. We have a pretty good retention rate with our members, and I think we provide a lot of information. But anyway, again, if you want to check out that model ETF portfolio draft next Wednesday, all it takes is a 30-day free trial. All right, that's it. Appreciate everybody stopping by. I hope you enjoyed it. And if you did come in late, this is all being recorded, so we'll make sure we get the recording out to everybody pretty timely, either tonight or tomorrow. So with that, everybody have a great night. Happy trading, and be back tomorrow morning with Trading Places Live. Take care, everybody.